Good evening and welcome to the Manic Money Finance channel. I'm Money Mike. I'm here to talk to you about everything finance. That's what we do over here at the Manic Money Finance channel. And I just want to go ahead and tell you guys about this exciting new strategy that I have conjured up out of my dark, demented, and twisted psyche. We're doing an audio check. We're doing a quick audio check right now, my peoples. And it's good. It's good. All right. So you're probably thinking to yourself, he's mentioning a new crypto strategy. What could this crypto strategy be? And I'll tell you right now, it's beautiful. It's a beautiful thing. It is low brain, low thought process stuff here. And it's easy to implement. That's the best thing about it. It is very, very easy to implement, right? So I'm going to go ahead and attempt to sign into my Coinbase. We are already signed into my Coinbase. This is beautiful. So I'm going to go ahead and just show you what I'm into now. And I'm going to show you why I got into this, right? So this right here is GLM. This is Coinbase Advanced. It's a little bit different than probably what you're used to. But basically, what I'm doing now is I am finding. So I'm going to go ahead. We're going to turn Coinbase Advanced off so I can show you exactly what I'm doing. So basically what I'll do is I'll go to this page here, right? This page right here is a buyer-seller ratio. This right here is solid gold, okay? And what I'll do is I will only look at the top crypto that is on a 90% or more buyer to seller ratio, right? So you find this bad boy and then you just buy it, right? Then you just buy it. And then this is what you get, right? So I bought this thing right around here. You know, I could have had a better entry, right? 26 cents. Not the greatest entry. But then look what it did. Look what it did. And this is 3 out of 3. I did 2 of these in the past couple days. You know, Arkham, right? We're going to look at the 5-day chart. Because I bought Arkham back here when it hit that 94 to 95% buyer to seller ratio. Now, I got out around here. Was it pure luck? Maybe. But basically, I'm looking at a 10 to 25% gain on every trade. And I'm using Coinbase to do it. It's literally the easiest trading platform to do this on, right? Coinbase is widely available. It has high trading volumes compared to most exchanges, and it has U.S. regulatory approval. But my best find so far was this bad boy right here. All right, go right to the 5-day chart. When this thing hit the 94% buyer to seller ratio, it was trading at 0.061 down here, right? And look at where it is now. It hit 2 pennies from 0.6 of a penny, people. 0.6 of a penny to 2 pennies. So I think I found a strategy that works beautifully. Because if you think about it, right, if you have an exchange like Coinbase, right, where the buyer to seller ratio, you have the volume you need, and it has that buyer to seller ratio metric or function. Like they're basically giving you everything you need to have consistently positive trades. Not financial advice. This is not financial advice. All right. And I mean, you see this thing right now. It is a beautiful, beautiful thing. So obviously, not a lot of people are using Coinbase Advanced. I would say, like you see, I have a Golem here. I would say this should be what you're using to trade cryptocurrency on Coinbase. You shouldn't be using their stock mobile app unless you're out and about and you need to, right? If you're at home and you're trading on the computer, like I will sometimes, this should be the thing that you're using. So this buyer to seller ratio is absolutely amazing. And basically what I found is you'll see there's going to be 10 to 15 of these bad boys on here. I only mess with this one. Once it gets above 90% on the 24-hour, and this thing updates, I think once every 4 hours, right? So if you're anything like me, you're checking your Coinbase app, regularly, because I stopped short-term trading the stock market. I'm taking a different approach to my finances, which I'll talk about a little bit here. And I basically threw a little bit of cha-ching in my Coinbase, and I've just started doing this. And so far, I've paid for all my expenses just by doing this. All my expenses and then some, right? And I threw a very small amount of money into this. I basically was treating it like a demo trading account. And I kind of wanted to see, hey, can I successfully trade this? Successfully use this strategy, use this, readily available information that's presented to me by a widely available app and make money doing it. And that's exactly what I did, what I'm doing so far, right? Obviously, if I'm 3 out of 3 now, I should probably, temper this trading high, this manic money high that I'm experiencing, but I won't. And as you can see right here, so I already pulled out my profit from the day, but basically what I'm doing is I'm running with $150. That's it, just to see if this tactic will work. And when you buy down here and this thing is up to here, as you see, just from the day today, I mean, life's pretty good. Life's pretty good. I'm not going to lie. And when you do that 3 times in a row, what? Just saying. Alrighty. So let's go ahead and bring up, a little Jerome Powell action here, because this was wild. This affected the stock market today. This particular situation affected the stock market more than anything else today. So inflation did jump, but Jerome Powell was in front of Congress today testifying. And it was wild. You got CNN, you got Barron's. I'm going to go to Reuters. I like Reuters. They're hitting you with a chart. They're showing you some concrete information here. Annual change in the U.S. Consumer Price Index, excluding food and energy, all items. Obviously, what we're seeing here is it's remaining steady where it's at. But So Jerome Powell got in front of Congress this morning and basically said, interest rate cuts, you guys are gonna just like have to deal. We're not throwing out any more interest rates cut right now. The Fed's target is 2%. It always has been and always will be 2% inflation. But as we know, oil has come down. And I've covered this on this channel. Oil has come down, commodities have come down. So there's no reason to think that this thing will last. Okay. We are 21 days into Trump's presidency, 22 days into Trump's presidency. So, I mean, you're talking less than 3 weeks, or just over 3 weeks. Obviously, this stuff's not going to happen overnight. But with the oil price basically cratering now, because, no regulation means low prices. We're going to see probably the March inflation should be greatly reduced. So the things that are getting tariffed right now are stuff like water heaters, like very random goods that are made in Mexico specifically, because we all know when it comes to Canada that we're probably not going to do anything. Canada's playing ball. They're doing stuff to increase the security at the border, to limit the amount of fentanyl coming in, etc. So therefore, you're probably going to see, basically just random Mexican goods that get tariffed. So the stocks went down today with Powell testifying, and especially in the morning when the CPI data came out. And the funny thing is Wall Street was expecting bad CPI data, and it wasn't nearly as bad as they expected. Therefore, you would have thought, Wall Street, the price is going to pop. Did not happen. You got a head fake. You got a shakeout, because by the end of the day, everything had rebounded better, or if not to where it was at the beginning of the day, or better. Like Bitcoin, I think is hitting 97, 98,000 right now. It's crazy. But what can you do? This is the macroeconomics right here. And I am going to click on CNN. I don't want to do it, but they have a good way of kind of like quantifying the information into, key points that makes it easy to digest. So, yeah, they're not doing that with this one. All right. So we're going to go ahead and we're going to check out the Bitcoin chart, and then we're going to compare that to the S&P 500. I like doing that. And look at that. Would you just look at that? There's the S&P 500 chart for you. So let's look at the daily chart here. This is really interesting because you can see that when it opened this morning, from last night to this morning, it was at, 6,050, right? And it opened down here at 9:30, just under 6,000. If you're looking at the SPY, obviously 1/10 of the S&P 500, so it was 599, 599.62, and right, and what you're seeing here is basically leading up to that 10 a.m. reversal. So we're seeing this thing dropping, dipping. It's not doing well. It's ugly. And then, of course, 10 a.m. comes around and this thing reverses. This is a nice little head and shoulders action. Ugly to see. We don't want to see that. At that point, you don't know where it's going to dip to. But luckily for us, it used the 6,000 as support. And obviously, whatever Jerome Powell had to say today was not that bad, because this thing continued back up into the 6,000s, right? And this is always, like I always say, like you can have GDP, you can have CPI, PPIs, you can have all kinds of economic indicators, the jobs reports, the wage reports, the new home building starts, etc. But what's going to be the greatest indicator on how people feel and the sentiment towards the American economy is going to be the S&P 500. It is the collection of the top 500 companies in America. and you see like giant gap and the gap filled. And what I'm seeing here is strength. Like obviously this is kind of like a head and shoulders action here, but we had a round bottom, and as we know, round bottoms make money. So I'm honestly, I don't think any of the economic data coming out this week is all that bad. So I think, we're in pretty good shape here. We're in pretty good shape. A lot of people are talking about recessions, depressions, etc. But as you can see, this is insane right here. This is insane. That is pure market manipulation on the side of Coinbase, because this is the Coinbase chart I'm looking at. You won't see this red wick anywhere else. This dropped to the 96. You can't even tell where it dropped to. 95.75. Oh my God. But as you can see, this chart basically mirrors the S&P 500. So they decoupled for a little bit last week as the S&P maintained its $6,000 price point, and Bitcoin dipped under 100. But I mean, at this point, it is so relatively close. It can very well remain in the ballpark, and we can see Bitcoin bounce above 100K within the next few days, especially when you see a chart like this. This is absolutely phenomenal as far as corrections go, right? You're seeing this thing regain this support right here, this 97.5 support, which is so much strength. It is unreal. Like obviously, if you back up to the 1 month chart, you're gonna see. Oh my God, who drew these lines on here? Oh wait a second. Oh wait a second. Was that you? Was that you, Mike? Oh yeah, it was me. It was me. And as you can see, this thing is funneling into this range that I talked about. So I talked about this. Like I'm not gonna say at this point as I'm looking at this. Oh geez. I'm not gonna say at this point as I'm looking at this if this thing's gonna go up or down. Right? I'm just gonna extend these lines out a little bit so I can leave them here. Because this is we're fast forwarding into a week, right? As you can see, this thing is funneling into this little cone. And you're gonna see price just start ping-ponging between these two blue lines. And eventually it's not going to help itself. And it's going to have to go up or down when it gets to a certain point. Now, obviously, these things are tightening quickly. And I would say within the next week, we're going to see the price deviation out of this cone. And it could be up or down. And not, if it's trading in the bottom half of this cone and it keeps pinging off of this blue line and it doesn't seem to be really going up, we're probably going to see it go down. But if it starts retesting, see this right here? If it starts retesting the top of this cone, that's going to be a great indicator that this thing is about to blast off. Right? And the greatest thing that this consolidation period in Bitcoin has brought us has a more stable trading environment for altcoins, right? Especially the well-established ones that are listed on all exchanges. Those are the ones you don't have to worry about. That's why I'm trading on Coinbase. I don't want to get rug pulled. I don't want to be trading on swaps and paying ridiculous fees and, losing a significant amount of money with every trade, and then I have to get 10% in every trade just to break even. I don't want to do that, right? I don't want to get rug pulled. Yes, I'm probably going to miss out on that 1,000% gain by trading stuff that's already listed on Coinbase because it's probably already listed on Binance as well. But what I am going to get is a very solid high risk to reward ratio, like you saw with Arkham, B3, and now with Golem, which I'm currently in. I'm looking at the Golem chart right now, and this thing wants to go over 28 cents. I bought in at 25. I right now, I bought in at 25 this morning. I'm very much low stress, low pressure. I'm relaxed. as long as Bitcoin keeps going up, I really don't have to worry. Golem's probably going to go up too because it's listed on Coinbase. You know, about 8 p.m. we saw this this weird head and shoulders pattern starting, right? And now we're gonna do a little near term action right here. See this higher high, low low, higher low. Now I always talk about like an 8:30 p.m. price action. And what I found, it used to be that 8:30 p.m. we'd see a reversal every night. Now what I'm starting to see is that 8:30 p.m. when Asia starts trading on Bitcoin, it brings a volatility level of Bitcoin. It's not necessarily a reversal. So what was true for 5 to 6 days in a row isn't always going to be true. You know, I always tell people the best traders have the best pattern recognition, but they're also not going to get stalled out and fixated on a particular pattern playing out day in and day out, because that's how you get wrecked. You need to be able to adapt, right? So I think Bitcoin is going to keep going up here in this near term. Price right now, 97.894. Hang on to that because that's going to be important. What we're going to do now is we're going to check in on the small account challenge, right? We're going to check in on this small account challenge. I got to log in here. Let's see if I did it right. Let me get this old verification code. Oh my God. I'm so sorry. I was not showing you guys the charts. That is super embarrassing. I was not showing you the Bitcoin chart right now. But as you can see, this is the Bitcoin chart. And as you can see, this is the SPY chart I was talking about. We'll back it up for the whole day. So yeah, that's that. As far as a small account goes, I decided to go with something a little more riskier. So and this is going to sound a little crazy, right? But I decided to get back into Rhyme Algorithm Holdings, right? So I was talking about this stock when it was dropping under 3 cents a share, and it was looking, granted, Chinese stock, it was looking like it was going to be possibly delisted, right? So I had to stop loss myself out of this stock back then, but they went through a reverse split, right? And now they are trading at $2.90 a share. So I'm sitting there and I'm trying to play it smart, right? I have a small account. It's been 4 weeks and I put $60 into this account. And as you can see, we are at 56.02, right? And I'm sitting here and I'm looking at, 4 or 5 different holdings. 4 or 5 different holdings. 1 second. She's a hungry animal. She just ate the rest of the food in the bowl and she was whining because she wanted more food. Oh, dog had to be fed, people. All right. So this is the small account challenge. It's been 4 weeks. I put $60 into this bad boy. Disregard this one. This is a long delisted stock. And my only wish is that I can somehow call up Charles Schwab and get them to take this thing off of my freaking account because it's ruining my cost basis, right? So, like I was saying, I was looking at conservative gains. This is a small account. I'm throwing $15 a week into this thing, and I need this thing to blow up, or else my viewers, you, will not take me seriously. So, I went all in on this bad boy this morning. All right? I'm looking at this thing. Look at the 5-day chart. All right? After the reverse split. Are you seeing the same thing I'm seeing here? Right? I'm seeing a bottom. And then I'm seeing that double bottom action right there. Right? This is a stock with less than 4 million shares. The short interest, right, is insane. The enterprise value is 7 million. The market cap is 6.84 million. We only have 2.38 million shares outstanding. We have a buy from the LSEG. Obviously, all the other guys, they're not doing any kind of analysis on the stock. They just did a 1 for 200 reverse split. There's no reason in the world why you would buy this stock, right? That's why I bought it. So every time I've seen a Chinese stock like this one do a reverse split, there was a major reversal shortly after. Because of the low market cap and the ability to spike the price of the stock, I mean, my near-term goal on this bad boy is to triple my money. So if I can triple my money 4 weeks into starting the small account challenge, I will really set myself up for success. And if anybody has been following the channel, you know we're putting $15 a week into this account. That's it, $15 a week. So at this point in the very beginning, you're looking for opportunities to spike that balance early on. So if I could turn my first 60 into 180 by taking this thing to $10 a share, I will eliminate so many weeks of putting $15 in, $15 a week in. I will eliminate what? 160 to 120? 8 weeks of contributions to this account. That's 2 months. So if you can take a small account like this and you can find something like this that is overdue for a reversal, very volatile, a small, tiny market cap. You can see in the aftermarket, in the after hours, it's trading at 290, but when it closed at 297, basically $3 a share. And I don't know if you can see my average cost on this bad boy. My cost basis, you can see my cost basis at 56.46. $297 a share, right? That's my cost basis. So that's basically break even at 4 p.m., which is fine. That's okay. That works for me. So basically, at this point, if this thing were to even take off to $5, I'm going to be in really good shape. So, like, obviously, I lost money on this stock, and I had to stop loss out to save my portfolio. And that'll happen sometimes, depending on your own unique financial situation. You might have to bail if you don't have dry powder left. But when I saw that this thing was in a particular region where I could buy and make money, I had to take the opportunity. And I bailed out on all my other holdings to jump full bore into this one, which, not financial advice, I wouldn't suggest unless you're, trading with money that you can afford to lose, etc., like I'm doing with this challenge. Yeah. A boom, a bada bing. So, I went over my new crypto trading strategy, which is working incredibly well. I went over the small account challenge. I went over SPY and Bitcoin with you guys. I'm thinking maybe we check out some economic data, huh? Let's check out the economic data for this week, right? I have to apologize to you guys. So I have been doing training at work this week. We've been super busy with that. Driving, several hours a day takes a lot out of you. Yeah. So the NFIB optimism index, not great. A lot of Fed people speaking. Fed presidents, Fed chairman testifying to Congress again on Wednesday. The consumer price index comes out. They're looking for 0.5. The median forecast is 0.3, but the actual is 0.5. Not all that bad. Year over year, 3%. Like the funny thing is that was the median forecast, but people were expecting much worse than 3%. The other thing that was interesting was the U.S. monthly federal budget. Did anybody see this here? This is a positive number. That's crazy, dude. That is crazy. So the forecast was negative 110 billion. The previous was negative 22 billion. Oh my God. Positive 129. The fact that the number is positive at all is absolutely nuclear and insane. And this happened at 2 p.m. and it might be the reason why the stock market regained the highs from the morning. You gonna go eat some food, Fred? Go eat some food. Might be the reason why the stock market regained the highs for the morning. So tomorrow, like every Thursday, we're going to have initial jobless claims. We're going to have the producer price index, which moves a lot slower than the consumer price index. All right. We're going to have core PPI year over year. Like a lot of people will say the PPI is a red folder thing. It's something that's going to affect the stock market a lot, but usually it doesn't. Usually Thursday is my best day trading. Usually Thursdays or Fridays. It's like Monday, Thursday, Friday, Tuesday, and Wednesday is a crapshoot. Always is. But that's just me personally. Obviously, depending on how you trade, you might find a lot of luck on Wednesday. But if you're not a dip buyer, you didn't make money today. Let's face it. If you were getting freaked out by what was happening for good reason, you didn't make money today because you didn't jump in early enough, and now the dip is gone, right? We're looking at import price index, U.S. retail sales, industrial production. All this stuff is really not that important. We've basically been through the worst of it. As we know, when Jerome Powell speaks anywhere, the markets usually go nutty. The fact that he was in front of Congress today and the markets did not go nutty means we can relax a little bit, people. We can relax. So, yeah. So, yeah, you can relax. You can relax. The next 2 days, just trade, not financial advice, but I don't think you have to worry about extraneous influences pulling the stock market anywhere you don't want it to go. If you have a system, if you have a strategy that works, just keep rolling with that. You're going to be all right. We're going to be all right. And I'm going to keep coming at you with the information you need to make that happen, right? So let's look at earnings, right? Let's look at some earnings here. All right, let's bring out the Yahoo Finance and check out earnings on Thursday. We have Coca-Cola. Applied DNA Silences, APDN. I've been in that one before. That one's a decent one. I'm not seeing. Damn. We have 523 companies reporting earnings tomorrow. That is absolutely insane. So obviously, what I'm going to do is I'm going to go ahead and consult one of my tools that I use for checking out earnings, right? All right. Look at today's earnings. I'm going to look at tomorrow earnings. So, earnings tomorrow. We have Twilio, Sony, Siemens, Palo Alto Networks, Honda Motor Company, Brickfield, Barclays, Zebra Technologies, Unicharm, TransUnion, Centauri Beverages, Penske Automotive, Nissan Motor Company, GE Healthcare. Wow. DraftKings, John Deere, Coinbase is reporting earnings tomorrow. This is wild. Applied Materials, American Electric, Zotis, Yelp, Wynn Resorts, Wendy's, Walker and Dunlop, U.S. Foods. U.S. Foods. I mean, this right here is Molson Coors Beverage, Shark Ninja, Republic Serves, Roku. This is an absolute insane day for earnings. Like, it is so wild. Moody's, how many companies, Leggett and Platt, that are reporting earnings, Iridium Comms, Ingersoll Rand. It is so insane how many companies are reporting earnings tomorrow. Hecla Mining. Like, when I see something like this, and I see just how many companies are reporting earnings, I can't help but feel overwhelmed by the prospect of trying to scroll through and research hundreds of different stocks. So really what I'll do is I'll do the after earnings play, right? Because earnings usually causes an overreaction in the stock price, right? Because stock prices are they're what? They're not a realistic representation of the company's current value. They are basically a prediction of the company's future value. They're discretionary. They are speculative, right? So what I'll do is basically the companies that have the most volatility, right? Whether it's down or up, I will find those companies after their earnings, and I will trade the opposite of wherever they go. So it could be up, it could be down. Typically, this works better when it goes down, right? Because shorts have to cover, and they will. The longs tend to be the most delusional members of the trading groups, and therefore I will wait for something to go down and I'll just buy because that'll be the easiest, most guaranteed money, not financial advice, without having to buy puts or try to short sell and have somebody lend me some shares that they have. I will just wait for it to dip hardcore and then buy. And that usually plays out most of the time, the majority of the time. So when you're looking at earnings day where 523 freaking companies are reporting, it's probably smarter to just sit back and watch the insanity unfold. Kind of like a pile up on a highway, a 10-car pile up on a highway. You know, most people won't admit that they would watch that. They might not watch it with enjoy it. They might not watch it with enjoyment, but they can't take their eyes away from it. They just can't. They can't do it. It's like a train wreck. You know, everybody wants to see a train wreck. They'll never admit it. So you just sit back and wait for this thing. Wait for this thing to play out. Wait for this thing to blow up, to shoot up. And then you trade the opposite direction of the over-exaggerated earning move, right? And that's usually a pretty solid play, right? Now, obviously, that's not going to work out every time for you. Earnings are very fickle. If you play it right, you can make a ton of money in a 24-hour period. But if you play it wrong, oh boy, you can get absolutely wrecked in the most epic of fashions, especially if you have no dry powder left. You used all your money to buy options, and it traded in the opposite direction of what you expected, right? So we're going to go back to our Coinbase play. This is Golem. When I started the stream, we were bouncing off here, inverted head and shoulders action, right? And now we are looking at a possible break above this 28 cents region. So right now, this thing is attempting to and trying to make its way up past the 28 cents region. And when I go and I look in the Coinbase app, you know, obviously I'm still making money here. But when I go and look at the highest buyer seller ratio, Golem is still at 92.93%. So basically 93%. And that right there is a great indicator that this thing is going to keep going up in the overnight. So I'll probably sleep on it. And as you can see, it's trying to make its way over the 28 cents region. Bitcoin went over 98,000 now and is trying to find support in those levels. And as long as, this is one of those ones that's highly pegged to Bitcoin in a lot of ways. But at the same token, because it's an altcoin with a significantly smaller market cap of 280 million, you could see much more parabolic gains than if you were to buy Bitcoin. And right now, Bitcoin, after going over 98,000, is retesting that 98,000 support. So if it doesn't maintain and hold that and pop back up, you can expect this one to consolidate slightly, maybe trade sideways. But if Bitcoin is able to, rocket towards that $100,000 range again, you never know. And that's the beauty and both the curse of altcoins, right? They're still pegged to Bitcoin. In a lot of trading settings, they are pegged to Bitcoin, unfortunately. And that's why you will see charts on altcoins that basically kind of follow Bitcoin. So you're watching this chart right now, right? Look at it. And we're going to just switch to the old Bitcoin chart. And while they might not be exact, they are very similar. And what you're seeing, especially in the near-term price action, right? Remember that Golem chart? This thing was spiking up over 28 cents. So what we're seeing now is 98.074. We're seeing that 830. That 830, the volatility here. Powell. So basically, if this thing keeps going up, we're looking at profit, baby. We're looking at profits. Yeah. It's funny. The more and more that you trade with desperation, and the more and more that the more thought you put into it, the less likely that you're going to be successful. Now, when I say thought, I don't mean research. The more research you do, the better set up for success you will be in trading. Like, you could never get enough research. But the thought you put into it, So when I say that, I mean mulling over your decision to make a trade, mulling over your tactics and strategies, sitting there doubting yourself and that fear and uncertainty. You need to get rid of that. You need to get rid of that. Because the more thought you put into trading, the less money you're going to make. Right? The more research you do, the more time you spend on watching these things play out and watching these things trade, you'll start to understand the patterns that play out on these bad boys. You will be set up for success. And let's go back to Golem. Oh, would you look at that? Would you look at that? Starting to see the shape up of a green candle. So obviously, I am going to make sure that I do another stream tomorrow night at 8 p.m. Just to make consistency, and also I'm going to hold myself accountable on this particular trade. Right, this Golem trade. I'm going to hold myself accountable to you guys on this trade and on the Rhyme trade, because that's how we're going to start doing things here at Manic Money. I'm restructuring how I come at the show. I'm going to give you guys a more structured show. I want to give you guys basically an itinerary for every show and go over certain topics on every show. Because as we know, this is more about news for you guys. This is more about research here. I'm not going to sit here. I'm going to tell you what trades I'm into. And that might come off as me trying to pump stuff. But that's not my goal. There's plenty of YouTube channels. They're pumping stuff. I'm going to show you my explicit trades. Especially the stock market trades after the market is closed. So I can never be accused of manipulating the market. I want to give you a more structured approach. I'm also taking a more structured approach to my own personal finances. Because as many of you might not know, I went through a situation that caused me to be out of work. And I accrued quite a bit of credit card debt. I will be point blank honest with you. I accrued quite a bit of credit card debt. And I am now have a good job. And I'm using that job to pay off. Did she drink all the water? Oh, dude. So, yeah. So what I'm doing right now, is I'm playing it cool on the investing. Obviously, I would love to open myself up to the most maximum amounts of gains that I can attain. But at the same token, I need to look at a risk-reward ratio on my own life. And the best thing for me to be doing right now is to power pay off every single iota of debt that I have right now. And that's what I'm doing. That's what I'm concentrating on. I'm still going to be trading. Obviously, we have the small account challenge on the stock market. And I have the new small account challenge on the cryptocurrency markets for you guys using this Coinbase tactic, the buyer-seller ratios. And I'm going to show you guys how to make money doing this stuff. Not financial advice. So, yeah. I hope you guys enjoy the new structure of the show, the new approach to finances. Oh, no, don't do that. You literally Sorry. We're watering plants up in her. Damn, those roots are just coming out of there, huh?
No, it's a lick.
A lick? A wick. So yeah. Probably gonna end this bad boy right about here. But I hope you appreciate. That's my sister right there. Hope you appreciate the new structure of the show, my new approach to this stuff. And basically what we're going to be doing is we're going to concentrate on taking a very small amount of money and growing it into something insane. And you're going to watch this happen in real time in the day-to-day here. Like, obviously, if you go to the Manic Money Finance Facebook, you will see that I am posting my trades. I will literally, right on the Facebook channel, be telling you guys when I sell a certain cryptocurrency and when I buy a new one, when I sell a certain stock and when I buy a new one. That's the part of the newly restructured approach to this. I'm literally going to be telling you guys my trades on the Facebook page. I don't care if that's, technically going to get me in hot water with some regulatory body. As far as I'm concerned, that should be perfectly legal for us to do as American citizens. And that's what I'm going to freaking do. So pay attention to the Facebook. Because that's where all the trades are going to be. The Instagram, I'll put them on the Facebook and the Instagram simultaneously. I'm going to drop them on the Twitter. And I'm going to post some clips to TikTok for you guys. All right. But until then, I'll see you back here tomorrow at 8.